Hello everybody, it's your boy Illuminati, and today's video is going to be a little bit different. We are going to talk about how to use Tradingview, the website, for charting purposes. A few of you had asked, and I thought I'd make a quick video on it, just talking about how to use the symbols provided and the charting indicators and the platform in itself. So for starters, we'll go to tradingview.com. Now, you don't have to sign in. You can immediately jump into a chart. They allow you to use a chart for 15 minutes without them requiring you to sign in. Otherwise, you can create an account. It's free. So let's just jump right into a chart. We'll go BTC USD. And so we're going to get to the page of the currency that you're requesting. And then they usually have an overview page. They'll have a technical page. And where they'll have their own indicators. I wouldn't trust these as much, but I mean, to each their own. And then they have markets in which it runs. So I quickly go into the interactive chart over here, and the chart should populate up quickly. Let's close a few of these things that we don't need. We'll skip this. Now we'll delete that. Let's see if that will close. Hide buy and sell patterns. Okay, good, great. And it automatically comes up with the Japanese stick candles patterns, and then they'll show the volume down below. I generally don't like the volume, so I'm just gonna, because I don't need it right now for this purpose, but I will take this out right now. Okay. So this is basically the blank chart you have to work with. Over on the top left, you have the time period to choose from. I always recommend going from the biggest time period down to the smaller time intervals. The bigger time periods will give you a general indication of overall trend. So trend over months, weeks, what you can expect. And then obviously you can go down to the smaller time intervals to look for short-term pattern formation, to look for exit and entry points, and so on and so forth. So that's where you'll look for your time intervals. Over here you can choose candles, or you can choose a line, and then there's various reasons to choose these ones, or you can choose bars, but what they're all showing you is price action, right? And I stick with the just candles, but it's to each their own. You could choose whichever ones you want to hear on the line, but for my purposes for analyzing charts, I just stick to candles. Now, what is this candle? Just to quickly talk about a candle. So what does a candle show you? It shows you the entry point, right? So whenever you hover over a candle, to your top left, you'll see O, H, L, and C. So that's open, high of the candle, the low of the candle, and the close of the candle, right? So whenever I'm talking about when a candle open, closed, I'm always looking to the top left when I have my cursor on top of the candle. So you have your open, high, low, close points, and then these wicks show where price had gone to a certain point and where it retracted back. And so that's why it's important to understand these candles, because they form certain patterns, which I had talked about earlier in my previous videos, and inputting the single candle patterns, double candle patterns together, you can start building up a picture of an overall direction. Then they have compare. You can always compare your chart to, let's say, for the S&P 100. And this is for reasons investors use this because they generally use the return on investment of an S&P 100 to compare their current investment if their return of income is on average similar to the S&P 100, below it, or above it. So as you can see right now, if you were invested in Bitcoin from the same interval whenever you started, and if you had invested in the S&P 100, you would get 76% return on the S&P 100, whereas with Bitcoin you would have got 9,973% investment, and that's obviously from the start of time. So this would be from 2013, I believe. So that's just a comparison. I don't use that, but that's what that is. Indicators. This is going to be where we live in terms of analyzing charts. So there's a slew of indicators that you could use here, and you could go crazy throwing every single one on. I believe when you're using just the free version, they only give you 3 choices to use, so you can't use more than 3 indicators. Obviously, you create your account. If you pay for it, also there's a paid feature. You can use as many indicators and you can open as many charts as you want. So I'm going to quickly try to go over um, the ones that I like to use the most. Bollinger Bands, definitely. Okay, so that's one I like to have on my chart. And why I use Bollinger Bands, because they tell me whenever I'm in an oversold or overbought position in relation to where the candlestick patterns are to um, uh, the high range trend line and the low range trend line of the Bollinger Bands. So whenever the candles break above and remain above the uh, upwards trend line, it gives me an indication of an overbought position, and this is on the monthly chart. Obviously, like we had discussed earlier, you have to use this in aggregation with your other indicators. So don't ever rely on just one indicator. But this is one of the indicators that I like, and then obviously the candle pattern as well. You have long wicks, upward wicks. This is called a tweezer top pattern, which is a bullish, not a bullish, sorry, it's a bearish, ensuing bearish trend pattern, along with an overbought position on a Bollinger Band, would indicate a bearish pattern ensuing, generally speaking. And then the other indicators that I like are Stoic RSI. Again, another indicator for oversold and overbought situations. General levels are set at 80 and 20. So if you're above 80, you're overbought. If you're below 20, you're oversold. I like to go even deeper than that. I like it to be at 90 and 10. And if I'm extremely conservative, it'll be 95 and 5 for the Stoic RSI to get in those regions to hit the overbought and oversold. Then along with these, one thing you should always remember is that every indicator, as far as I'm aware, is reactionary. Predicting there is no indicator that can successfully, conclusively from the data tell you what's going to happen in the future. It just tells you what the market has been showing, right? So right here, it says that the market was overbought. Will it continue to be overbought in the current moment, or will it continue up? I mean, there's no indicator that'll tell you that, but it'll just tell you that this is generally overbought. Now, why is that important to know? Because psychology of traders is what's going to ultimately, if you understand the psychology of the market, you will reap in profits, because that is where the money is. Understanding the psychology. You can use all the technical indicators in the world, but if you can't put it all together to create a picture, to create a story for the psychology of the market, then you'll always be behind the market, meaning you'll never be in sync with the wave that's currently happening. So that's why it's important to understand that these are all reactionary indicators, and that these indicators kind of show you what has just happened, and our job is to take all those indicators and hypothesize what is going to happen currently and what will happen in the future. Okay. So that being said, that's stochastic RSI. You can also just use RSI in general. You don't have to use the stochastic RSI. You can just use this one, which is also set in terms of oversold and overbought conditions, and supposed to show you when levels approach either the highs or the lows. To the left, you can see the periods that that it uses to calculate its graph. So right now it's using a length of 14 periods. So if you're in the monthly chart, it's using 14 months together. Each tick is taking an aggregation of 14 periods. So you can adjust that accordingly to your preference. And then it's using right now the close price. That's basically what it's set to. You can use the open price instead, the high price always of these candles, the low price, and all these. I don't usually touch this. I just leave it at close. I do adjust the length to my personal preference. And yeah, I adjust actually even the Bollinger Bands. You can adjust the Bollinger Bands if you go up here. You can adjust the length and the standard deviation. I do adjust it to my preference. Because I would just encourage you to experiment on your own and find values that you think, and also back testing it by looking back in the charts and seeing, well, and if I set these levels, did they accurately predict price movement? Be careful of self-fulfilling prophecies. Be careful of setting charts that clearly show in the past how price moved, because that's not always an indication of the future. All you can do is be in it in the present and keep a tally, keep a tab of what each shows. So we've showed RSI, stochastic RSI, Bollinger Bands, volume. Volume is also important when you're looking at, okay, are people jumping into at key levels, or are they not appreciating a certain level to be a key level? That's when volume would come into play. And the mother of all indicators, to me at least, is